Hey everyone, Dan here. We are in the after hours of Tuesday, June 15th. Today we're going to take a look at Senseonics. Before we get into it, if you enjoy these videos, please hit the like and subscribe button. It helps a lot. And also feel free to comment below with your thoughts, ideas, questions, concerns, tickers you'd like me to cover, whatever it may be. All right, let's jump right in. So basically the rundown that we're going to give SENS today is we're going to do a chart analysis, get a sense of where we are, some potential catch zones, dip buy zones, upper price targets that we could look for based on previous price activity. And then we'll hop over and basically dig through some of the data and see what might be contributing to the beatdown that SENS has been taking since it had this nice run up that lasted several days. Okay, so today obviously down another almost 7%, over 8% if this after hours holds, down another 1.63. So definitely not a phenomenal day for SENS bulls. If we look here, we had 58 million in volume, which is a solid 30 million higher than the average volume. So definitely a lot of interest. Pretty rough to see a sell-off so significantly when there is that much volume. And we'll save the rest of the data for the data portion, but first let's kind of get a grasp on the chart. So this actually isn't that surprising that this price kind of bounced a little bit from this zone here. There's like a little band, so we'll sort of like put it in the middle of the band. 3.487, it obviously got stretch support there today, but you see previous resistance turned to support, used it to jump off. Previous resistance, took it down quite a bit. That would be another obvious catch zone as it settled right around here. All of this previous support, resistance, resistance. So those are a couple immediate zones that I would look at. This here might offer a little bit of something, but I don't know that it would be as strong, so I'm going to leave it off for now. I think more so what you're apt to see if it does fall through this 348 zone is it coming down and kind of testing, toward 308 or 309, maybe sort of like bouncing back up around this 316, 317 mark and trying to make a run to reestablish support at 348. So that's what I would look for as potential catch zones on the downside. On the upside, there is going to be a little bit of stickiness where it is right now, basically against this 364 area. Obviously, it's picking up resistance there right now, but it has previous resistance there, some wick support here. So that might be a little bit of a sticky point. The more heavier resistance I would expect to come in around 376 if it's able to work its way up. And then it gets into some interesting zones, we'll call it right around here. As it approaches $4, there should be a few areas that, and even if it blows through these zones, say it has like a huge run up like we saw here, it still should offer really strong support on the way back down if it does kind of loop its way back around, aka make a sad face pattern, as you see right here. It can be, even if it doesn't treat it as resistance on the way up, it's likely still going to catch it as support on the way down. So I'll plot it there to about the mid 4s at the moment. It would give it plenty of room to run, and obviously if it can work its way through there, we could definitely take another look. Unfortunately, I think this is retraced, more than would be allotted for like a typical bull flag. I think that would have had to have cut right around here at this 399 zone if it were to rock it up based on that sort of like flagging out pattern. But, I would look for it to break this down trend line that it has going for it here. Right around there. So that could be happening in the pre-market if it's going to work its way out of there. This might be stretched a little bit longer. Let's see. Put this right around there. So it's a little bit hard to tell if that's actually where that downtrend is met, because it's really just stretching to the wick there. The other option, we've seen this before in other stocks, is that the actual downtrend was here. You see several tops being consumed in that downtrend, and that it actually broke through there on that big green candle today, and then started to sort of follow the top side of that downtrend as the day went on, which is commonly what we see when something breaks a channel or a trend, is it oftentimes will start to sort of like hug back toward that. And the question is then, does it fall back underneath it or into it, or does it continue to work its way out, even if that's sideways, and then use that momentum to springboard itself up? So I'm going to guess that's more apt what has happened today, but it could always work itself back in if it falls down here, like the, say, 330s tomorrow, early on in the day. On the indicator side of things, on the RSI, it's obviously relatively low, not quite in oversold territory yet. Let's see if it made it oversold today. It actually didn't dip quite below 30, got to high 32s, then stabilized there, and then had a little bit of a push up, but spent a lot of time in overbought territory here, and then just couldn't hold the midline, which is what you'd want to see it do in order to make another run up. Once it breaks that midline, that can be a pretty telling sign. So has plenty of room to push up if the buyers come back in. Also on the MACD, I mean, enormous bear momentum on the histogram there. That's a pretty sizable space that it's occupying. But that said, the MACD is well under the baseline, looking like it could very well be performing a bullish crossover and would leave itself a lot of run room, especially if it were to push back up into this like 0.22, 0.23 area like we saw before. That could be a nice green day. All right, so I think that'll do it for the chart period. Yes. Okay, let's hop over here and take a look. This is the short data. So I want to sort of talk about what has kind of happened here. Most of this is like 528 data. So this would actually be, let's get to a time frame that shows this, when a bunch of these shorts would have been in. So a bunch of these shorts would have been in here. So the question starts to become, how much of this was the result of a squeeze, and then how much of this has drawn in more shorts after they were squeezed? What often happens is the shorts will squeeze out, and then once the price starts to peak or stabilize and seems like it's going to start to drop, they'll hop back in, retake a new position, and just kind of rinse and repeat, try to drive it back down from a higher price point than they closed out at previously. But anyway, they would have been taking these positions like all around this consolidation period, interestingly enough, where the stock was only like under $2. So just keep that in mind. But it is over 20% of the float being shorted as of 528, so that's considered pretty significant, and a high amount of short interest. If we expand this out and hop over to the market beat side of things, we see here there was a slight increase in shorts from the previous report, so 514 to 528. They're also recording 21.6, 3 days to cover. So, folks holding on to these for a few days, but I mean, there wasn't a lot that was of value at that point, because it was just doing this sideways thing very, very close to zero as it was. I mean, even as you see here, I don't know if this is just a glitch, but they're recording the dollar volume sold short as 0. And the price on the reporting date as 0. But if we look up here, this does show 130 million in short volume ratio on April 15th. I don't know. I don't know why it's glitching out and having this 0 portion, but obviously that's an error. But this is just to say, again, there is increasing short positions leading up to this run, and so it's interesting to see how that'll play out. On the short volume ratio side of things, this is the day to day. So we actually have today's data in here right now. 20% of the volume today was short selling, and 20% is, on the cusp, but it's on the higher side of things. What's more interesting is like these days in the 30s. So several days in the 30s, several days in the mid to high 20s. Those are very, very significant days. So a lot of those started taking place 6-4, 6-7, and then again on 6-10. So 6, 4, 7, and 10. If we zoom in a little bit, we can see here, what do we see? 6-4. So a bunch of folks took positions when this ran up. 6-7 took more positions to try to drive it back down, and then probably closed out, to be honest, probably contributed to this run, and then took positions again when they saw it, maybe folks starting to take some profit or what have you, folks that had been part of the run up from like $2 to $3.50, taking some profit, push it down here. A bunch of shorts coming in again on 6-10, potentially after this run up here, though maybe that was also additionally caused by some final closing out. But as we see, a lot of short volume on this day, but it continued to run up. So then on subsequent days after 6-10, we saw it staying relatively high in the 11th, but then pulling back yesterday and today. So it'll be interesting to see sort of how that plays out in the coming days. But, they're still coming in a bit, helping to drive it down here, but they had pulled out quite a bit right around this area. And then I think when it peaked out here, yesterday and today, they were potentially jumping back in again, but maybe testing the waters a little bit. Yesterday was obviously, and the day before was obviously much higher. But on 6-11, as this was running up, they were obviously jumping in quite hard to try to take advantage of the jump in price. What really stands out to me on this one, let me hop over here really quickly. So the float of SENS is 317 million. And you see here the fails to deliver on 420, 414 all the way to 426. These are millions and millions of shares, day over day over day, for several days, 3, 6, 9 days, in the several million. Like, we're not talking even about 1 million, 2 million. We're talking about the lowest being almost 7 million, 6.8 million, all the way up to over 10 million in a trading day, failed to deliver the share. So somebody bought a share, and then, it takes a couple of days for that to settle. Well, that person who bought it sent their money out, but whoever was supposed to put the share in their pocket or in their brokerage failed to deliver that share. And so essentially what that person is holding at this point is an IOU. And so these shares, whether they are ever reconciled to tie back to the actual share, or if they just sustain as an IOU indefinitely, is the big question that often comes to play when there's naked short selling entering the marketplace. So that's sort of a big question here. Obviously, it died down quite a bit on 427 and the dates thereafter for whatever reason, but I have rarely, if ever, seen this many days in a row of such enormous fail to deliver volume, on a stock with 317 million. You see, like, I think AMC has a float of something like 500 million, 550 million, something like that. And even they, with all of the shenanigans that take place in that stock, don't get runs like this. So at this point, this is a couple months old, or coming up on a couple months old, so it'll be interesting to see how that plays out. I don't exactly know, but it's something to keep an eye on. There is new data out as of today, the second half of May, so I'm waiting for that to get processed, or I've already downloaded the file and I'll parse through it myself, but I'd rather let Fintel do the work if they do it relatively quickly. That said, short sellers coming in, they have a pretty low borrow fee in the single digits. That's not going to put much pressure on them, and it seems that they have pretty solid supply of shares to borrow in order to short sell back into the market. So nothing there probably preventing them from continuing to do so and working to push this price down further and further. The biggest counter to that is going to be if SENS can get a foothold on one of these support zones and push back up and force them to close out some of the positions. I think it's really apparent that that's a lot of what happened here and probably a bit here as well, pushing that price up. I think this is a common sort of like rotational pattern of close it out, wait for the price to boost back up, and then retake your short position now at a higher price, assuming that this will be unsustainable by institutions, retail traders, what have you. So that's my take on SENS. Good luck if you're in this one. It's definitely an interesting one to keep an eye on, especially from all of those fails to deliver. I'll definitely do my best to do an update as that more recent data comes to light. All right, well, good luck this week. I hope your trading is off to a good start, and I will see you in the next video.